Hello, hi, it's Adil speaking with regards to the US market analysis. Just bringing you a review and Friday's trading. Obviously, today it's going to be quite important with regards to economic data that's out with regards to US employment. Okay, and exactly what the reaction is going to be on how we anticipate what the market will do. Okay, right, so yesterday we had a potential, well, we had quite a significant short squeeze in US markets given the fact that more than likely they were front running Twitter news and obviously LinkedIn earnings, and we had another bellwether, I can't remember now, but basically we had a lot of front running, especially with regards to the Nasdaq, and that's why the gap fill on the S&P 500 failed to hold as resistance. Okay, so what's happening now? So basically at this very moment in time, we've got the China market down. We've got the Shanghai down, same scenario as yesterday. The only situation is slightly different today is that the actual Nikkei is higher today, given the fact that USD JPY are pushed higher and Euro JPY pushed higher. But saying that, the Euro JPY has held a 135 double top resistance level, and USD JPY has actually come off the highs now and is down 30-40 pips off the highs. Okay, so yesterday we had a risk-off scenario, like I explained in my previous video, in my European analysis video. The Nikkei and the Shanghai were down yesterday, and you had concerns with regards to Greece. Obviously, Germany not agreeing with the Greeks is a risk-off scenario, and that's how we interpret it, because there's no real solution with regards to Greece if Germans are not on board. Okay, so that's certainly interpreted as being a risk-off scenario. Also, you had economic data out yesterday that was circumspect to a large extent. You had certain areas in the US economy beating, and other areas that were obviously failed. You did have the employment side of the situation certainly stronger, but then you had concerns with regards to the balance of payments, and also with regards to unit costs, which is the level of inflation. Unit labour costs actually rose double the amount, so therefore that increase that equates to inflation. Inflation equals a stronger dollar, and obviously that means rate hikes coming faster than expected. USD non-farm productivity actually minus 1.8%, so it was expected to come out 0.1, so it certainly missed expectations quite drastically there. Okay, US initial jobless claims lower than expected, so that's obviously bullish, and that bodes well for the economic data released today, which, as we all know, with regards to the US labor force participation rate, and obviously USD average hourly earnings, and it's all about the actual change in manufacturing payrolls. Okay, so that's basically what we're looking forward to today with regards to the US jobs market. But that certainly does slightly give an indication, especially with unit labour costs rising and jobless claims lower than expected. So there's certainly a mixed reaction with regards to economic data out the US, and the talk has been recently, especially with Mr. Buffett coming out and trying to talk the dollar down. Mr. Kocher coming out trying to talk the dollar down. So there certainly seems to be a concern with regards to a stronger dollar. Now, obviously the US jobs data will dictate which way the dollar will go, but one of the most important aspects that you need to look at right now is the US dollar index. And the US dollar index basically lies at critical support. This is your daily chart of the US dollar index. Okay, you're at that lower channel support. If you go to our 4-hour chart, you can see that again we're at critical support. If you look at a 60-minute chart, which I've highlighted, we have a H&S formation. So what does that mean? That basically means that if obviously the economic data comes out worse than expected, then that will cause the dollar to fall, which means obviously sorry about that, early morning. It's 5 o'clock at the moment. So yes, so basically we have H&S formation, which, as we all know, if the economics data or the US jobs data comes out weaker than expected, pushes rate hikes backwards, obviously, and that gives a dovish stance to the market, and we could have a potential rally in equities if the market focuses on rate hikes. If the market focuses on strong economic data, then obviously that's a totally different scenario altogether. If it's a weak data, the market will initially sell off, and then we may well get the dip buyers coming in later on. Okay, so again, we don't know whether the market likes bad news equals good news or good news equals bad news, given the fact that bad news equals good news or good news equals bad news, given the fact that obviously it's all about tapering, or well, tapering has started or more or less finished now. Basically, the QE is certainly not in the market, or should we say the morphine is not being injected into the market. I mean, if anything, morphine is being injected via Europe at this very moment in time. So again, um, the scene is set for a dollar collapse, which means, well, one would then presume, given the H&S pattern, that the actual obviously rate hikes will be pushed backwards, and that should eventually lead to an equity market rally. I'll let you decide with regards to that. Okay, I'll let you decide. Okay, so now that we know Greece is certainly a concern, we know the Shanghai is down, we know the Nikkei is up. Okay, we know USD JPY has come off the highs. Okay, and what exactly is going to happen next, because it's all about the jobs data. Yes. Okay, so let's have a look at the technical setup now, because the bias from my perspective, given the fact that Shanghai is down because one Chinese official stated that this is not a continuation, or it's not a QE with regards to rate cuts, it was just a one-off. Don't expect more rate cuts. Obviously the market's being interpreted as being bearish, hence the reason why the Chinese markets are down. Okay, so usually it's China or it's Asia that usually has the ability to interpret the market correctly with regards to risk on and risk off. So from my perspective, that's certainly a bearish stance going into today, especially with Greece in the background and Germans disagreeing. Okay, right, what happens now? So let's have a look at the technical picture now, and let's try and look at each indices and see if we can find any clues. Okay, so let's start with the Dow, and usually I look at the Dow Transportation Index, see if I can pick up any clues from there. So let's go to our daily chart. Daily chart, you can see here from my perspective, you have a potential here for a H&S formation. So you have this, okay, and you are looking at the 50 MA, you're looking at horizontal resistance, okay, which means that we have a right shoulder in place, and we are into the 61 to 50% fib resistance. Okay, so that's basically how I'm reading that, and I'm looking at a H&S formation potentially playing out, given the fact that we're putting a double top already, we're making a lower high, so we're looking for a lower high, and down we go. Okay, so that's my interpretation of things. Okay, with regards to the actual Dow Transportation Index, we can look at a 60-minute chart, and we all know that we are into solid resistance here. We've got horizontal resistance there, previous support equal resistance there. You can use your diagonal trend lines, draw that in there. Obviously, if you do get an uptick, then obviously you're looking at potential resistance up here. But for now, certainly Dow Transports to me is into horizontal resistance and a potential for H&S formation. The Dow, okay, the Dow on the daily chart, as you can see, we are slamming into horizontal resistance. Go to a 60-minute chart, again horizontal resistance. Go to a 10-minute chart, we've had quite a stellar rally, and it seems to be exhausting itself now. Okay, given the fact that the new higher highs are not as substantial as the previous ones. Okay, so let's just keep an eye out with regards to that. Okay, so again, watch out for this pattern here, a break of this, and then down we go. Okay, so Dow is into resistance, so both the Dow are into resistance. Let's have a look at the actual Nasdaq now. Given the fact that obviously Twitter earnings is certainly one of the most important keys factors here. Okay, so you've got gap fill resistance of 2076 and obviously 2085. Again, very important resistance. Okay, so 60-minute chart, obviously we had a push higher, and it's all about that resistance level. Now, I have discussed this pattern with regards to the actual let's have a look at this here. So looking at a potential rising contracting wedge pattern potentially breaking down. You do have obviously horizontal resistance here, which needs to be respected, previous support equal resistance there. So again, that's something that we're going to keep an eye out for with regards to the Nasdaq itself. Okay, that gap obviously is crucial. I mean, every market loves to close the gap. One of my concerns is that given the fact that the economic data came out with regards to Twitter and LinkedIn, and that still hasn't given the ability for the Nasdaq to rally higher and close that gap, which is a slight cause for concern. Okay, and from my perspective, will that gap close is debatable. Okay, very debatable, given the fact that the rest of the US markets are into resistance, and also given the fact that the semiconductors, which I've explained already, we went past the 75% resistance, but we are looking for a potential lower high here. Okay, whether we push higher into the 50 MA and allow the Nasdaq to go higher as well is certainly debatable. Okay, now that certainly is into resistance with regards to the semiconductors. And again, on a 60-minute chart, you can see here we are into the 200 MA resistance. So again, that will act as resistance. So looking at the biotechs, we close the gap, and like I said, we are making a HNS formation. So if you look at the right shoulder, you're into the 50 to 61%. You're retesting this key breakout line, and down we go. Okay, so the Nasdaq itself is certainly bearish, given its leaders or laggards certainly are indicating downwards as well. Okay, let's have a look at the S&P 500 now. S&P 500 horizontal resistance, and 60-minute chart, again horizontal resistance. We failed to hold this gap level, which I'm surprised given the fact that Greece concerns, etc. But that's the market, folks. We use support and resistance. That's what we rely on. If it breaks resistance, it breaks resistance. I mean, that's it. That's trading for you. How many times? I mean, you had a support level here. You can see here initially you breached, it retraced, and moved right back higher. So it's support and resistance is our bread and butter, and that's what we must rely upon. Okay. So again, it's 60 minutes is into resistance. So watch out for this resistance here now, which is 2064. So that's your pivot. Obviously, you break above that, then you're rallying up to 2090, and we'll see exactly how that transpires. It's all about the payrolls data. Okay, so that's your 60-minute chart. Your 10-minute chart, yep, we've certainly flushed higher or moved higher, so that certainly needs to be respected. The gap obviously failed to hold. We have an unfilled gap left behind now, so the onus will be on that gap there. So that gap like a magnet at 2042, and for now we're just using this as a benchmark. So we're looking at this here, okay, and that's basically all I can see at this very moment in time. And again, like I said, 2064 is being used as a benchmark for the S&P 500, and it's all hinges on from my perspective, it's certainly a risk-off scenario. Why? Because the Germans are not on board with regards to Greece, and the Shanghai is down as well. So again, two important factors. Okay, so let's verify that with the Russell 3000. Russell 3000 did actually break through resistance, so certainly must respect that for now. Quite impressive. Okay, and we'll see whether or not that's sustained. Looking at a 60-minute chart. Okay, so looking at a 60-minute chart, I mean, you do have a horizontal resistance up here. So again, quite an impressive move on the Russell 3000. Let's have a look at the Russell 2000, see if we can get any signs or indicators, any reason there. Okay, we obviously slammed and closed the gap. So again, that's gap fill resistance. So the Russell 2000 is telling you that the S&P is certainly into resistance as well. So both of them must certainly be respected. Okay, right, so that I think more or less sums it up. We have the Wiltshire index, which I tend to follow as well, and again that's into horizontal resistance. So basically all my US markets, all the US markets basically are certainly slamming into resistance and confirming resistance, and everything certainly hinges on the US data. So this is going to be very interesting with regards to the actual reaction today. So obviously, from my perspective, if the economic data or the jobs data out of America can't be too strong, because that will cause a risk-off scenario. From my perspective, because it's all about interest rates, and that dollar will certainly start to rally, and may well create a risk-off scenario. That's if good news equals bad news. If good news equals good news, given the fact that we're into taper now, and tapering's more or less finished, the market has to stand on its own feet, and has to come off the life support machine, so to speak. Then you will see a positive reaction. If the individuals are too focused on interest rate hikes and are concerned about the easy monetary policy and a dovish Fed, then what you'll see is if strong economic data comes out, it'll sell off. So again, the reaction is going to be very interesting, and it will be a telltale sign as to what the market is thinking and how they're interpreting price action. Hence the reason why it makes it very hard with regards to data, and it's all about the heavy money or the big money, what they're expecting, or how they're positioning themselves. Obviously, they've got the European QE put, and obviously they've got the Japanese QE put to back them to a large extent. And US markets have been lagging, but there seem to be a bit of a wind in their back now, and they are certainly playing catch up with regards to global markets. I mean, just look at the Dow, for example. I mean, if you look at the Dow itself, Look at a daily chart, and you can see the thrust higher. I mean, that's quite an impressive thrust higher from 17,000 all the way back up to 18,000. So, and we're currently at 17,900, and that's just in the space of 1, 2, 3, 4 days. Very, very impressive. Very, very impressive, especially with regards to the argument that the QE is obviously going into Europe, and therefore Europe would be a buy and US would be a sell. That's not the case now, is it? Okay, so again, we've broken out of this downtrend, as you can see here. It needs to be respected. We're short squeezing, and we are into 17,900 resistance on the Dow as we speak. So again, folks, that's my interpretation. We are into resistance. My inclination at this very moment in time is certainly bearish, and I am short on the European indices because of the failure for Greece to actually secure any deal going forward. Regardless of all the talk, the Germans are certainly opposed. The euro is starting to rise in Europe because of Mr. Wiedmann's anti-QE comments, and talk about the QE in Europe finishing earlier than expected. So it's and also given the fact that the Fed members or the Fed's cronies, such as Mr. Buffett, have been attempting to talk the dollar down, and obviously have tried to push back rate hike expectations without the Fed compromising their own credibility. So this is interesting. Okay, there's a lot of currents at play, hence the reason why it's very hard to read this market right now. I'm currently minus 20 points this week so far, so very, very tough week for me to read the markets and read between the lines, especially with regards to the Greece news going back and forth. Either way, folks, risk on, risk off, wax on, wax off. I hope my insight with regards to the US markets going into obviously the economic jobs report today in America gives you some perspective and helps you with your trading and navigating these markets. Okay, folks, so risk on, risk off as usual, wax on, wax